Live from London, this is Bloomberg Daybreak Europe. I'm Bonnie Quinn with your top stories. Oil and gas jump and global stocks fall after Israel and Iran trade attacks on Middle East energy facilities. The world's largest LNG export plant in Qatar suffers extensive damage. President Trump presses for de-escalation of attacks on gas plants, but he threatens to, quote, massively blow up the entirety of the South Pars field if Iran hits Qatar's LNG facilities again. Plus, the Fed on hold as Chair Powell says it's too soon to judge the impact of war. Investors await commentary now from the Bank of England and the ECB. So let's look at those markets. Brent crude is above $112 a barrel, very close to 113 today, really escalating in price yesterday. Now, you see the spread to New York crude WTI is ever widening. Traders are betting that there will be some kind of an intervention in this market on the part of the U.S. administration if these prices continue to rise. We'll see if that happens or what will happen to the price of crude. But for right now, it's firmly below $100 a barrel, and that spread continues to widen. Look at the two-year yield after Powell's press conference yesterday, up more than 10 basis points. We're at our highs of the morning here right now. We're seeing this across the G10 global space. Fiscal tightening, but it's not for the reasons you would like, right? It's not for global growth and it's not for better growth metrics. It's because of inflation risks. You're going to see that more potentially today with the ECB and Bank of England on deck. Let's take a look at futures because we are pointed lower both here and in the United States. Micron doesn't seem to be helping today, even though it beat on every imaginable metric, but it is also spending a lot more than the market anticipated on building out factories into next year, and that put a pull on those shares in the after hours, so that's not going to help too much today. Look at the yen, very close to 160. We should see a hawkish tilt from Ueda, but the statement was very neutral, so we'll see what happens there. If we don't get the hawkish tilt, we could pop 160. And gold firmly below that $5,000 now. It's up today, but it's down generally, and of course central banks across Asia not likely to be buying as much at the moment. Your risk events for today then: we get UK labour market data, that's at 7 a.m. UK time, and then of course the central bank extravaganza, the Bank of England at 12 p.m, the ECB at 1:15 p.m, and then at 8:30 a.m. UK time we get the Riksbank and the SNB rate decisions. Oil prices paring gains after attacks on some of the Middle East's most important energy facilities. President Trump calling for de-escalation on those attacks. Qatar's Ras Laffan industrial city, which houses the world's largest LNG export plant, has suffered extensive damage. It all comes after Israel hit the key South Pars gas field in Iran. We're joined now by Bloomberg Horizon's anchor, Jumana Brzezinski. So, Jumana, talk us through these latest strikes.
Well, it's day 20 of the Iran war and another major escalation. After Israel launched those airstrikes on the South Gas Pars field in Iran yesterday, it became apparent that Iran were intending on striking back. And indeed, they issued a notice to many Gulf countries saying that some of their key energy infrastructure sites could be targets overnight. And that is indeed what has ensued. We woke up this morning to news that Ras Laffan, which was already initially targeted by Iran in the early days of this war, had been targeted once again. And even though the Qatari authorities were able to intercept 4 missiles, one of them managed to penetrate and did cause, quote, extensive damage. This is per the wording that was put out by Qatar Energy. And this is both to their LNG facilities and to their gas to liquid facilities as well. Ras Laffan, its importance on the global scale cannot be understated. It accounts for about 20% of the global LNG supply. Even the facility itself is about a quarter of the size of New York City. It is massive in terms of the production and also in terms of the key amount of gas reservoirs that it's sitting on. But Iran didn't stop there. They also targeted some gas facilities in the UAE as well, the Habshan gas facility, Bob Fields too. There were successful interceptions, but at the same time, the reports of some limited damage and production has been halted. In the same vein, they also targeted a couple of refineries outside Riyadh and attempted renewed attempts on on those eastern oil fields as well in the Kingdom of Saudi Arabia. So we've seen broad targeting of energy infrastructure. And what I would say, Vani, the difference here is this time around, they are targeting the source of production. These are upstream facilities. They're not just targeting refineries, but actually the source of physical production. And so what's at stake here is not just supply disruption, but supply destruction.
Wow, Jumana, that is deadly serious. What has been the response from the Gulf states to these attacks?
Well, very angry. The Ministry of Foreign Affairs from Qatar issued not one but two statements overnight. They say that this was a flagrant violation of state sovereignty. They essentially kicked out Iran's military and security attaches from the embassy. They say that Iran has crossed a red line, but then reiterated the need for de-escalation. But I also want to bring you some comments that came through from the Saudi Foreign Affairs Minister as well, Prince Faisal bin Farhan. Take a listen to what he said at an extraordinary meeting that was being held with other GCC foreign ministers at around the same time that these barrage of missiles were being intercepted.
It doesn't believe in talking to its neighbors. It tries to pressure its neighbors. And what I can say categorically, that's not going to work. The kingdom is not going to succumb to pressure. And on the contrary, this pressure will backfire.
That's the Saudi foreign minister saying that Iran's actions will backfire, that the trust is shattered. Iran is mistaken if it believes that Gulf states are incapable of responding. And then later on, he went to say that Saudi Arabia could respond with political or even non-political means as well. And I think it's fair to say that this marks the end of a roughly 3-year détente that has been in place diplomatically between Iran and Saudi Arabia. This was an agreement that was brokered by China back in 2023. What has happened overnight has massively changed the calculus for many of these Gulf states in the region. And from their perspective, Iran has indeed crossed a red line, and they have been dragged into a war that they didn't start.
Jumana, thank you so much. That's Bloomberg's Jumana Bersachi in Dubai. Well, following the energy field attacks, President Trump took to social media to deny any U.S. involvement and said Israel would not carry out further strikes on Iran's South Pars site. Let's bring in Bloomberg's John Herskowitz. John, he was particularly quick. Why did the president need to respond to these gas field attacks so immediately?
Yeah, I mean, we're seeing the markets have been spooked by this. I mean, apart from the closure of the Strait of Hormuz, these are major facilities in the region, and we're seeing gas prices, the price of oil going up. And Trump was very quick to respond. He did a late night post on Truth Social. He said that it was a mix of deterrence, de-escalation, and threats. He distanced the U.S. from Israel, saying that the U.S. didn't know what was going on, and also said that if the attacks continue at these LNG facilities in Qatar, that he would blow up the South Pars gas field of Iran. This is one of the key pieces of Iran's energy infrastructure. So this is a major concern for the president. In the U.S., it's becoming an election issue. Gasoline prices are rising, which has a knock-on effect on the economy and inflation. So it's political at home for him, and the international affairs are spilling over into the politics that is really crucial in this being an election year for Congress, House of Representatives, and the Senate.
We'll see what, if anything, can arrest these prices. John, thank you so much. Bloomberg's John Herskowitz there. Stocks in Asia are lower than after those energy infrastructure attacks. Let's head to Hong Kong for an update from Bloomberg's Winnie Su. A red day across the board, Winnie.
Yeah, exactly, Vonnie. As you mentioned, these damages really weighing on Asian stocks given Asia's reliance on energy imports from the Middle East. And adding to that, you've got escalating oil prices and also these inflationary concerns from yesterday's Fed meeting. Now, we are seeing MXAP here down almost 3% after having risen for the past 3 days. And adding to those macro headwinds, you've also got weak earnings from Chinese companies, specifically Tencent here down about 6% 3%, leading losses in Chinese stocks. And that is coming after how it reduced its buybacks and also didn't have a clear plan when it comes to its AI monetization. We will closely be watching out for Alibaba's earnings due later today. Now flip the board and take a look at the Japanese assets, because Japanese stocks here extending declines with the Nikkei 225 here down more than 3%. Yes, we did have the Bank of Japan keeping rates steady as expected, but the focus really is how they flagged these key risks when it comes to the uncertainty surrounding the geopolitical tensions in the Middle East and also higher oil prices fanning inflation and potentially hurting the economic outlook, and hence those inflationary concerns driving yields further higher. Now we flip the board and take a look at the currency reaction, because overall, yes, the yen holding on to its slight gains today, but the weak trend continues. Now just hovering right below that 160 level against the dollar. We will be watching out for the presser coming in just about 30 minutes or so, and the key focus will be on the tone from Governor Ueda, because any dovishness can risk the yen going past that 160 level, despite the finance minister saying that the authorities are ready to intervene in case any currency moves. But more importantly, or equally importantly, we are also watching out for that meeting between Prime Minister Takaichi and President Trump expected later today in D.C. And the focus will likely be on the potential support when it comes to Iran war, any economic collaboration and currency policies. Back to you, Vonnie.
Winnie, thank you so much. That news conference starting in about 20 minutes. That's Winnie Su in Hong Kong. Now, Fed Chair Jerome Powell said the Middle East conflict has added fresh uncertainty to the inflation outlook after the central bank left rates unchanged as expected.
The implications of events in the Middle East for the U.S. economy are uncertain. In the near term, higher energy prices will push up overall inflation, but it is too soon to know the scope and duration of the potential effects on the economy.
Let's bring in Bloomberg MLive strategist Mark Cranfield. Mark, did Powell strike the right tone? Did he sound hawkish enough? I mean, he basically said the U.S. economy was doing fine before this, and we don't know how long this is going to last, or we don't know anything about the impact it's going to have.
I think he threaded the needle pretty well, as investors would have expected, really. He's not going to be in a position where he wants to jump the gun on this. There's always the possibility that Trump finds an off-ramp and that the war ends a little bit quicker than people are expecting. And then, of course, he would look a bit foolish for being too hawkish about it. And he'll also want to see what other central banks have to say. As you've been talking about earlier, we've got European Central Bank, Bank of England. European Central Bank in particular will be one that he'll be watching very closely as well. If there's any need to change interest rates, particularly in an upward direction, traders would be surprised if the Fed did that before the European Central Bank did it. So it's a very careful path that he needs to tread. And he also bear in mind that he's recently seen some jobs data, which was pretty horrible from the United States as well. And that's the other side of his mandate. It's not just about the inflation side as well. So, of course, he would want to tread as carefully as possible. But if in 3 months' time we're still talking about oil prices $100 or even higher, then the situation changes dramatically. And that's why traders have priced out any chance of an interest rate cut in the near future from the Federal Reserve. They're going much back to a neutral stance. And if you look at as you've got on the screen there, those yields, if you look at that 2-year yield, 380 or so, it wasn't too long ago that we had a 3.3 handle. It's just in the last few weeks. So that's an incredible change in the 2-year. And it's because the private sector, they can see that the inflation data in the numbers that they can see off not so much the ones that are reported officially by the government, but in the private sector, there are inflation numbers which already show that it's starting to bite, particularly when you get diesel at $5 a gallon. People know that it's going to get a lot worse. So Powell has to tread very carefully. And of course, the White House is watching over his shoulder as well. So he has to pick his language carefully, but it's heading in that direction where if it stays this way for much longer, the Fed is going to have no choice. They're going to have to start seriously thinking about raising interest rates.
Well, and he did allow for the fact that tariff inflation had been a little more persistent than he had been thinking too. Mark, that bear flattening move that you referenced was pretty violent yesterday. Does it continue, or have we done the repricing now and that's it until we get more signals?
This is really the only early stages, really. the jump in oil prices is so significant. When you get a $40 to $50 change in oil over a very short period of time, that is going to play out in the inflation numbers for quite a while, not just for a space of a couple of weeks. It's going to stay there for some time. So the move that you've seen in terms of flattening, if it's anything like what we saw in 2022, there's a lot more flattening to come. That's kind of the benchmark that people will be thinking about. The last time that inflation changed so quickly as it is now was about 4 years ago, and the flattening was quite dramatic. This is nothing compared to that so far. We could even have a situation where you get almost a flat curve right away from the short end to the long end, and that would need a massive adjustment from where we are now. That would need oil prices to stay up for a few months, but considering the fact that we don't have any immediate signs of off-ramps, people won't be discounting that totally. But at the moment, it's very much a week-by-week basis. People won't be looking too far ahead, but there's understandably a lot of caution from investors as much as there is from Jerome Powell.
Yeah, and we'll see what the rest of the messaging is from the other central banks this week too. Bloomberg MLive strategist Mark Cranfield, thank you so much. Still ahead, we're live at Bank of America's Investor Summit in Paris, speaking to some great guests. This hour, we're going to hear from the bank's chief Greater China economist. But first, central banks assess the upheaval caused by the conflict in Iran. We'll discuss what impact it will have on today's BOE and ECB rate decisions. That's next. This is Bloomberg. Welcome back to Bloomberg Daybreak Europe. The European Central Bank and the Bank of England are both expected to keep rates on hold today as policymakers assess the disruption caused by the conflict in Iran. Markets are increasingly signaling that the energy shock is pushing central banks towards a hawkish tilt as growth momentum fades. To discuss all of this now, I'm joined by Bloomberg's Jana Randau and Morwenna Coniam. Jana, let me start with you. Does the ECB face the same hurdles as the Fed exactly?
In a way, yes, and in another way, no. What they all face is uncertainty, of course. Nobody knows how long the war in Iran will last, and that is crucial to determining how the economy responds, how inflation responds. Now, we heard from Fed Chair Powell that he was worried about inflation even before even considering the energy price shock in the domestic economy, the lingering effects of tariffs, of course. The ECB, on the other hand, they were quite content with the inflation outlook. They described it as in a good place, same language they used for interest rates for the policy stance. Now, that is going to be interesting to watch whether they repeat that. I doubt it, actually. So different manifestation of the same problem, if you want. The economy is weak. Inflation was hovering around target, and now uncertainty is back. And uncertainty in Europe means nobody's spending, nobody's investing. The economy will suffer. Prices will rise, and that on the back of an inflation shock that is not forgotten yet.
Yeah, and Morwenna, let me come to you on the Bank of England. Did Powell provide the template for Andrew Bailey today, or does Andrew Bailey need to sound more hawkish than Powell?
Well, I think it will be really interesting to see what he does say about inflation today. I think when we look at what they've said previously, it was very much talking about the disinflationary path still being intact. But they did say that that was sort of based on the current evidence and that they were actually sort of aware of the potential for any shocks. And I think that that is what we have seen. Whether they can look through those second-round effects is, I think, the thing we'll be really looking for. We've got jobs data this morning as well, and that's going to give us a sense of whether the labour market, in the preceding period was continuing to weaken, whether some of those inflationary pressures have been dissipating, but also whether there's a need for the bank to be more supportive. And so I think he's been given the sort of template. I think those inflationary risks are there. And a lot of the Monetary Policy Committee have remained quite concerned about that. I think how the vote split actually is and what they say individually will be quite interesting to give us a sense of where they might be going next.
And in fact, traders, if anywhere in the world, they're pricing in more here in Britain than, even the European Central Bank traders are pricing, or the Fed, they're pricing in a full hike now, and that's such a reversal from just 3 weeks ago. What about the pound and gilts? Do we see the pound continue with its resilience? Because it has been fairly resilient thanks to maybe the thoughts of a carry trade.
Yeah, absolutely. The pound has been, performing like fairly well. I think whether we see those sort of hawkish expectations continuing to be priced in, they might actually suggest that the inflationary threat, it could be more short-term or uncertain, and actually the market could be disappointed. There have been suggestions that this pricing in, which has fluctuated quite a lot, of a full hike by the end of the year, is a bit extreme. So I think how the bets move today, could be quite important for the pound. But I think the dollar has been having such a big influence on it as well. I think gilts will actually they're the ones which have really been moving in tandem with those expectations for, first of all, a rate cut and now a rate hike this year.
They've been pretty stunning moves. Jana, let me come back to you. Morwenna mentioned the jobs data that we're going to get out of the UK in a little bit. How are things looking for the wider European economy and the environment?
Yeah, so inflation risks in the Eurozone are clearly up. Still, we don't expect any move from the ECB today. Strong vigilance, and that is a message that probably the Riksbank later this morning will sound as well. And probably the most interesting to watch this morning is actually the Swiss National Bank, just because for them, what we're seeing happening around the world is reflected in the currency. The franc is a safe haven, so whenever there is a crisis, investors pile into it. For the Swiss economy, that means import prices go down at a time when inflation is already close to zero. The Swiss National Bank doesn't have any space left to cut interest rates unless they consider negative, which they really don't want to. So currency interventions is an interesting topic. They've said they're more willing to intervene. So that is something that, is interesting this morning. And then as we turn to the ECB, it's all about managing risks.
Yeah, traders are going to be glued to all these news conferences today, as are we all. Thank you so much, Bloomberg ECB reporter Jana Randau and Morwenna Coniam, co-editor of our Markets Today blog. Coming up, HSBC said to be considering deep job cuts over the coming years. More on that. Bloomberg Scoop next. This is Bloomberg. Welcome back to Bloomberg Daybreak Europe, and now to some other top stories we're following this morning. Bloomberg has learned HSBC is considering cutting roughly 20,000 jobs, which accounts for about 10% of its global workforce in the coming years. The cuts will target back office and service centre roles as CEO Georges El-Hedary bets on AI to handle more tasks. El-Hedary has already carried out a radical restructuring of the lender since taking the helm in 2024, cutting thousands of jobs, selling some businesses and merging and closing others. Micron shares fell in late trading as it warned of heavy investment to meet demand, with capital spending this year exceeding $25 billion. Micron says third quarter revenue will be around $34 billion, which is above analyst estimates. Memory prices have been soaring on shortages fueled by AI computing demand. The CEO of Norway's $2.1 trillion sovereign wealth fund, Nicolai Tangen, is warning that the convergence of an AI bubble and geopolitical risks pose the greatest threat to global markets. The agency says an AI bubble could potentially cost the world's largest wealth fund 35% of its value. Meanwhile, geopolitical risk could wipe out as much as 37% of the fund's value in a worst-case scenario. S&P Global Ratings has lowered its outlook on Cliffwater's flagship private credit fund to negative from stable, citing elevated redemption requests that threaten its liquidity. Coming up, we're going to be in Paris speaking with Helen Qiao. Bank of America's Global Investor Summit will be all over it. This is Bloomberg. From London, this is Bloomberg Daybreak Europe. I'm Bonnie Quinn with your top stories. Oil and gas jumping and global stocks falling after Israel and Iran trade attacks on Middle East energy facilities. The world's largest LNG export plant in Qatar suffers extensive damage. President Trump presses for de-escalation of attacks on gas plants, But he threatens to, quote, massively blow up the entirety of the South Pars field if Iran hits Qatar's LNG facilities again. Plus, the Fed on hold as Chair Powell says it's too soon to judge the impact of war. Investors await commentary now from the Bank of England and the ECB. So let's look at these markets then. As you can see, Brent is now trading above $113 a barrel. It just keeps going higher. That said, the spread between Brent and WTI is ever widening. Traders seem to think that the US will get involved in this market in some way, in the futures market, or by doing something to make sure that prices don't get too high. So that holds for now. We'll see what happens. But Brent is having no such luck. Brent is just pricing in the risks to this market. As you can see, we had a bit of a violent move after the Fed yesterday. We're now at 380 on the 2-year yield. Bear flattening. That steepening trade seems to be gone. And if you listen to Mark Cranfield of MLive, this could be the beginning of weeks of a move like this that could end up with the yield curve looking actually pretty flat across the board. Equity index futures wise, we are lower. We've been lower across Asia, and we look to be headed lower into the European Open and also into the US Open. There was maybe a little bit of a hope that Micron might help, but results, even though they beat, didn't please investors because there's going to be a huge amount of spending. Dollar yen is trading awfully close to 160. We're about to head into the news conference with Governor Ueda. We'll see if he sounds hawkish. Otherwise, we might see that level taken out. And gold looks like it might be starting its decline once again. Time now for your front page news, dominated once again by the Middle East. The Financial Times leads on Iran inflicting extensive damage on the world's largest LNG facility in Qatar. It comes as Tehran has vowed to retaliate against Gulf energy plants after its South Pars gas field was hit. The Wall Street Journal also reporting on the escalating attacks on Gulf energy assets as the Iran war plunges into a new phase. Finally, Les Echos also leads on the Iran war, headlining that oil has surpassed $110 a barrel. And you can get a roundup of the stories you need to know to get your day going. In today's edition of Daybreak, terminal subscribers can go to DayBGo. Oil and gas prices rising after those attacks on key Middle East energy facilities. Iran hit the world's most important LNG export plant in Qatar after Israel attacked an Iranian gas field. Let's bring in Bloomberg's Asia oil trading reporter Rongwei Neo in Singapore. Rongwei, do we know what extent global oil supplies will be further affected by these attacks? I mean, if you look at Brent, it's up another $1 just in the last half hour. Does that just continue?
So the attack, as you rightfully mentioned earlier, Vonnie, the attack on the Qatar LNG facility, rather than just looking at it as a standalone attack itself, I think traders are looking at it as a form of escalation in this Iran war, which we are well into about the third week of it. So it marks a step up of Iran's reaction to what's happening so far after its South Pars field was attacked. And for the traders, they're seeing this as a point of escalation in the conflict, because now the threat to energy facilities in the Middle East region is very, very real. And we can see that reflected in their fears of the supply risks, which of course reflects in today's Brent prices uptick as well. So on all these that's happening, let's also not forget that as the conflict continues to stretch out, all these logistical issues we are seeing, such as tankers being unable to transit in the Strait of Hormuz, damages we have seen so far in various energy facilities across the Middle East region. Even if war does come to a conclusion in the next coming days or coming weeks, it would take a much longer time to actually unwind all the damages that the energy and oil sector had faced during this conflict.
All right, Rongwei, thank you so much. That is Bloomberg's Rongwei Neo. I want to bring you some lines now from Governor Ueda of the Bank of Japan, who has begun his news conference and talking about oil prices. He says they need to watch the impact of oil prices on price trends, and he does expect price trends to rise slowly and gradually. He says the rise in oil prices will put upward pressure on prices. So getting straight into dealing with the inflationary impact of this war, he says that the bank will keep raising rates if the outlook is realized and the real rate is significantly low. Let's see what the impact on the yen is. We are trading now at 159.70, so virtually unchanged since those lines crossed. So nothing unexpected, but also he's not hiding from the fact that there are inflationary pressures there. Bank of America holding their 4th Global Investor Summit in Paris. It comes amid global uncertainty and geopolitical risks heightened by the escalating conflict in Iran. Bloomberg's Francine Lacroix is there for us with a special guest. Francine.
Thank you so much, Vani, and good morning. We're joined for an exclusive interview with Helen Qiao, the Chief Greater China Economist from Bank of America. So, Helen, I'm so happy to speak to you. Thanks so much for joining us. Look, there's a lot of thought about, if you look at what the oil price will do, it's unclear how long it stays at these levels, if it impacts inflation, but can it temper the deflationary pressures we've seen in China?
Yes, in that sense, I think the higher oil prices are not necessarily too unwelcoming, but I would say that it's pretty tricky because China is, after all, an importer, net importer of energy, and therefore any higher, oil prices, LNG prices, potentially is seen as the terms of trade loss, which can hurt growth. While inflation is probably slightly higher, but you also have a growth impact.
How does the energy crisis actually play in terms of dynamics within Chinese growth?
Well, for every 10% oil price increase, we see the potential hit on the GDP growth by about 0.1 percentage point. But of course, that's holding everything else equal. They probably shouldn't be holding everything else equal, because what China is going to do is that they may potentially step up on policy stimulus or potentially use more subsidies to help. There is a price smoothing mechanism in China that allows the gasoline retail and also diesel prices to fluctuate less compared to otherwise without, and so that could potentially help to kind of buffer the pain a little bit. But on top of that, we think that there could be separate measures to try to boost domestic demand if needed.
And then we also had some data actually out of China which shows, I think, quite a significant improvement in the first 2 months of the year.
Yes.
Is the economy turning a corner?
Well, turning the corner or not, we're uncertain yet, because we need to see hopefully the March data for first quarter combined to have a better assessment. But I do agree that the Gen-Feb data seems to suggest that the domestic demand is doing much better than we generally were expecting. And on top of that, you had a 22% export growth. So both external and domestic demand-wise, China is seeing quite some rosy picture out there for the outlook of the first half.
And so this is growth. What are the levers that the government can pull?
Well, the government has fiscal, monetary, and potentially, property measures that they can probably deploy. But at the moment, judged by what we saw on Monday on Gen-Feb data, I don't necessarily think that they will be in a rush to put out too much stimulus yet. Monetary policy-wise, of course, we were hoping that a PBOC could do more, by, for example, conducting RRR or interest rate cuts. But at this point, especially with, CPI inflation potentially rising on the back of the energy shock, that probability is coming down.
How does what we've seen in dollar dynamics actually impact renminbi?
Well, we saw overnight that the dollar has been strengthening further, and then renminbi has weakened a little bit, but only, I would say, going back to earlier of the year, the beginning of the year levels. But that, I think, going forward would potentially be the challenge, that if dollar continues to climb further, whether renminbi would be the relatively weaker part, like the rest of the currencies in the world. But at this point, if you look at the CNY, it has been the more stable anchor within Asia. It actually moves less compared to other currencies. So hopefully that its anchoring impact for the region will continue to persist.
Helen, longer term, do you see a move away from U.S. assets, and actually could
some China to move away?
Yeah, I mean, just in general, from investors to move away from dollar or U.S. based assets, and could that benefit China and renminbi?
Well, yeah, that's what everybody is saying. Maybe this is the way for internationalization of the CNY, etc. But I would say maybe it is not necessarily a zero-sum game, and there is room for more, renminbi to play as a, let's say, as a currency for both asset side as well as a liability side. Many people used to say that, oh, we'd love to hold the currency with a positive carry. Well, that was when interest rate of renminbi was much higher and renminbi was appreciating. That was the opposite afterwards. But we can see that actually the interest on China from on renminbi from investors move away from the asset side towards the liability side. People want to borrow more in renminbi terms. So that could be, in the near future what we may see.
I mean, there are also rumors, and they're complete rumors, so they're unfounded, as far as we understand, that the Iranians would ask a lot of the ships to be paid in yuan instead of dollars. I mean, if something like that were to emerge to be true, does that change, how much does that change actually the future of China?
Well, yeah, this is probably just a street talk so far, but I wouldn't necessarily say that the settlement of a particular trade, and not to mention that it's probably not a big part of the oil trade globally, is going to change the fate of the renminbi. We are still living under the dollar standard, and I'm afraid that just a small part of the settlement won't necessarily lift the renminbi to a much higher level in terms of its status as an international currency. We need to see more broadly that this currency is being held by investors, being trusted by them, and being used and probably used as a conduit currency, as a borrowing vehicle as well. And that will take time.
How do you see the other economies, actually, the neighboring countries to China, changing because of what's going on with oil in the Middle East?
Well, very good question. Actually, we are in East Asia looking at, for example, the impact from oil shock. And LNG and oil both are actually very important to the region. And in particular, I would say from oil perspective, Thailand and the Philippines, probably without the help of the subsidy system to smooth the price changes, would have the biggest impact in terms of the boost to inflation and the impact on growth. But on top of that, you also see that a lot of the regional economies, such as Philippines and as well as Japan, has 95% of its oil imports coming from the Middle East. So they are very concentrated in terms of the source. And therefore, the longer this conflict persists and the longer the disruption to the supply stays, it's probably going to challenge the near-term growth picture and inflation picture there. Of course, LNG is another story, and we see, for example, Taiwan, Korea, as well as Japan heavily dependent on Qatar, natural gas, and even, for example, for their power generation. So that could be a potential problem if this lasts for longer.
President Trump was also saying that the meeting between himself and President Xi has to be delayed because of everything that's going on in the Middle East. How do you expect trade between the two countries to develop?
Well, yes. Hopefully that we will still see this, the visit happening in April rather than in March. But we will say that the trade probably will benefit already as we speak in March as a result of the IEEPA-based tariffs being replaced by the Section 122 tariffs. China is actually poised to benefit the most with a gap of probably 11% of effective tariff rate change after the Section 122 of 10% replaces the previous ones. So we think that China's exports to the U.S. will probably come back a little, especially even some of those transshipment ones will probably come back too.
Helen, thank you so much for joining us. Helen Qiao, the chief Greater China economist and head of Asia Economic Research at Bank of America. With that, Vonnie, I'm going to send it back to you in London, and we'll have plenty more throughout the day here at the Bank of America Global Investment Summit.
And we cannot wait. Fantastic conversation. That is Bloomberg's Francine Lacroix at Bank of America's Global Investment Summit in Paris. And there's plenty more, as Francine said, from Bank of America's Investor Summit throughout the day, including a conversation with the 2025 Economics Nobel laureate Philippe Aghion. Want to bring you back to Governor Ueda and the Bank of Japan news conference. So Bank of Japan Governor Ueda saying the bank needs to watch the impact of oil prices on price trends and that the rise in oil prices will put upward pressure on prices. Getting straight into it there. He says oil prices could also raise inflation expectations and will weigh on the economy if prolonged. Ueda saying that The bank will communicate more carefully on CPI and will keep raising rates if the outlook is realised that he just expressed. Now, he said the impact of the Middle East situation will be a key point in all of this and that policy will be decided meeting by meeting. He's also watching the spring wage talks and also business behaviour to see how businesses respond to this oil price shock. Once again, Bank of Japan Governor Ueda really pleasing the market, I would say, because the yen didn't really move at all on these comments. It was a little bit stronger and it's holding on to those gains at 159.70 or thereabouts. After Ueda basically said, we are watching this. We're going to decide policy meeting by meeting. There will be an upward impact on price trends. And even though the Japan economy has been recovering moderately, and that's his word, global financial markets are volatile and need to be watched. Coming up, divisions running deep among EU leaders on a response to the Iran war. We'll hear what's on the agenda at a crucial summit today. This is Bloomberg. Welcome back to Bloomberg Daybreak Europe. The escalating conflict in the Middle East and the resulting energy shock is set to dominate an EU leaders summit today. But divisions are running deep over how to frame the bloc's response as Germany's Chancellor calls for Europe to more aggressively pursue its own interests. Let's bring in Oliver Crook, Bloomberg's chief Europe correspondent. Ollie, EU leaders meeting with the backdrop of this new war now in Iran had a huge number of consequences for the continent. What will today's priorities be?
Yeah, this is a leaders meeting that was supposed to be about competitiveness. This has been the sort of slow-burning theme that the Europeans have been trying to tackle for the last sort of year and change in order to get their competitiveness back on board. And every single leaders meeting, it seems, things get co-opted by the President of the United States in one way or another. And this time, of course, it is the war in Iran. There has been generally a somewhat consensus view from the European leaders. You've had some sort of countries in the Baltics, Poland, Finland, those that really border Russia that have broken a bit, saying that they should consider NATO activity in the Straits of Hormuz. But apart from that, Vani, about everybody in Europe, all the leaders said that there is absolutely no appetite to have any sign of military embroilment within the Middle East, that this is basically Trump's war. This is not Europe's. This is not NATO's responsibility to deal with. That being said, there might be an opportunity here for this leaders meeting to try to find places to have olive branches to reach out. For example, we heard from Emmanuel Macron saying that basically once the more active phases of the war, potentially the French could be involved in helping sort of ships pass through the Straits of Hormuz after the bulk of the fighting has been done. So potentially that's one way the Europeans can take a role. That being said, I think the other sort of concern is going to be for these European leaders, what is the consequence of defying Donald Trump? We heard from Trump yesterday on Truth Social saying, I wonder what would happen if we finished off what's left of the Iranian terror state and let countries that use it, we be responsible for the so-called Strait, the Strait of Hormuz. That would get some of our non-responsive allies in gear and fast. He also retruthed, if that's the term for that, a New York Post opinion piece saying U.S. allies need to get a grip and step up to help the Straits of Hormuz. So for the European leaders here, it's really about them trying to find a response to Donald Trump and try to find ways to potentially put out an olive branch in a week that has really sort of upset the president in terms of the NATO and allies' response here in Europe.
Yeah, so it's not Europe's war, but yet Europe is suffering major consequences, both in terms of energy prices and also in terms of, everyone turning their eyes away from Ukraine. What would they hope to leave today's meeting with on just those two issues, Ollie?
Yeah, absolutely. On Ukraine, the main issue here is this 90 billion euro loan. It had been agreed to by every single member state back in December. Everyone thought that that was sort of done and dusted until Viktor Orban has raised an objection to basically getting that loan through. It's a major issue, Vani, as you know, because the funding cliff for the Ukrainians is fast approaching. In the next month or two, they're going to run out of money. They really need that 90 billion euros in order to continue their war, to fund their budget. That being said, between now and April the 12th, when the Hungarian election is, this is going to be part of the political backdrop here. There's a chance that Viktor Orban today is really his final European Council meeting. So that is going to be part of the calculation, both for Viktor Orban to act strong in Ukraine for his domestic audience, but also potentially for European leaders. So they're going to put pressure on him to try to get him to honor his commitment on that loan. The other thing that we're going to be watching very closely today, Vani, is the ETS, the emissions trading system. That is really the main lever that the European Union has to pull in order to try to get prices down on carbon on carbon. It's an emissions trading system in order to basically bring down the sort of prices for large emitters for large industries. And as you know, Vani, in the interviews that you've done over the last couple of days, for example, with Heidelberg Cement, we spoke to the steel industry. The difference between where we have an energy shock, which is what we're experiencing right now, to an energy crisis is about 2 months. So there's a bit of wait and see. A lot of the energy insulation has been down to the member state level, but the Europeans today will be doing that debate on the ETS, the emissions trading system, to try to reduce those carbon prices. That is a place where opinion is split, but that is a very sort of big conversation that we'll be beginning today with European leaders.
Oliver, thank you so much. You'll keep us updated throughout the day. Oliver Crook, Bloomberg's chief Europe correspondent. And tomorrow, Oliver has an exclusive interview with the president of Cyprus. That's at 7:30 a.m. London time. Let's get back to the Bank of Japan news conference now, because we have some more lines coming out of that. Governor Ueda is saying it's difficult to judge if a shock is temporary or not. Of course, he's talking about the oil and energy price shock. And it's hard to say how long they'll need to watch the impact of the supply shock. He says good communication with government has been going well. But earlier he had said that he's going to communicate more carefully on CPI, and that the bank does need to watch the impact of oil prices on price trends, because they obviously will put upward pressure on prices. Now, the yen has been paring its gains just ever so slightly. It seems that this was pretty much in line with what the market was hoping to hear. We're at 159.77. Plenty more coming up. This is Bloomberg.
We're well aware of the performance of inflation over the last few years, and how a series of shocks have interrupted progress that we've made over time. It, of course, is kind of standard learning that you look through energy shocks, but that's always been dependent on inflation expectations remaining well anchored. The rate forecast is conditional on the performance of the economy. So if we don't see that progress, then you won't see the rate cut. This is one of those SEPs where a number of people mentioned if we were ever going to skip an SEP, this would be a good one, because we just don't know. I have no intention of leaving the board until the investigation is well and truly over, with transparency and finality.
Jay Powell speaking in what was supposed to be his penultimate press conference as Fed chair. We'll see if it actually is his penultimate one. Let's take a look, though, at market reaction, because you saw a pretty violent reaction across the curve, but particularly at the front end, the policy-sensitive end. We have that two-year yield up to 380, and you're seeing this across G10 countries now as central banks need to turn more hawkish. The 2-10 spread at 47 basis points. Let's take a look at oil, because the spread between Brent and WTI is ever widening. Look at this. We're talking about a $16 spread now. And then let's take a quick look as well at the Pulse guests that are coming up. Today's edition of the Pulse will be live from Bank of America's Investor Summit in France. Francine's guests include the CIO of Amundi and PIMCO's Rich Clarida. The opening trade is coming right up.